Good afternoon, members, and thank you for joining us for this webinar. It's always exciting to hear that tune play. I mean, I believe it evokes feelings of patriotism in all of us. And once again, thank you for attending this monthly webinar. So this is our August series of the PSSF member education webinars. My name is Gumbo Njoroge from the Corporate Communication Department, and I'll be moderating this discussion today. So as you know by now, members, the topic of our discussion this afternoon is how your retirement savings are invested. It's based on the promise that this pension scheme gives to its members through its vision and mission, that our mission is to collect your contributions to optimally invest and pay retirement benefits to you and your beneficiaries when you retire. So this afternoon, we want to undertake a discussion on how are your retirement savings invested and how do they earn your investment income? And as a member, how can you monitor what investment income you have earned during a financial year and over a period? So this afternoon, I'll take you through the program of our engagement. We'll have some few announcements from the Corporate Communications Division. And then we'll have our main presentation from the fund manager, Gen Africa, to be handled by Emma Mugo. So Emma will speak on how your member savings are invested. She'll walk us through the journey from when your contributions are deducted from your employer and remitted to the pension scheme. So what happens thereafter? How are they invested? How does the pension scheme arrive at decisions on where to invest? And what regulations guide how we invest your contributions? So it's also important for you as a member to know that. Then in the second part of this engagement, we'll have a presentation by the fund administrator. We'll have a representative from CPF Financial Services walking us through the established systems on how do you track your allocated investment income. When the Board of Trustees is announcing the investment income at the end of the financial year during the AGM, what parameters do they use? And within what timelines would you as a member know how much investment income was allocated to you from the contributions received to you during that financial period? Then in the last part of this engagement, we'll have a Q&A session, an opportunity for you members to also engage with us, ask questions. We'll be taking questions throughout the presentations. You can use the chat function, send your questions through the chat. We'll have some officers responding to you even as the presentations are handled. So on to our announcements. The key announcement this afternoon is that the Board of Trustees approved a decision to host the inaugural PSSF Pan-African Pensions Conference. So we'll be hosting this conference between the 26th to the 28th of November. And the conference will be hosted at the Diamonds Leisure Beach and Golf Resort in Diani. We are inviting all of you members to register to attend this conference, and you can do so by visiting pssf.africa. So we have shared that domain on the screen. We are expecting to have a conference, a huge conference with engagements drawn from government and the private sector, and generally from pension schemes around Africa. It's a Pan-African Pensions Conference, so therefore PSSF has provided a platform for pension schemes from around Africa to share knowledge, to have a forum for dialogue, and also establish mechanisms in which pension schemes around Africa can partner. The chief guest for this function will be the Prime Cabinet Secretary, His Excellency Musalia Mudavadi. We'll also have keynote addresses from the Cabinet Secretary, National Treasury and Economic Planning, that is Honorable FCPA John Badi. We'll also have the Cabinet Secretary, Public Service, Human Capital Development and Special Programs, that is Honorable Geoffrey Ruku. So take note of these important announcements, members, and register by visiting www.pssf.africa. The second announcement is regards to the normal member communication. Just to remind you that the pension scheme has established various approaches in which you as a member can engage with us. One of which is by call. We have shared the number with you. There's a dedicated telephone line, which is 0746 111 777 that you can engage us through. You can also reach us through WhatsApp by following the scheme on our established WhatsApp channel. You can also engage again through the superannuation newsletter. So this is a quarterly publication that the pension scheme publishes, just again to also appraise you on the key developments within the scheme. And we also regularly communicate with you through the various social networking platforms that the scheme has established. But important also to remind you that every year the Board of Trustees host an annual general meeting, which is your meeting. It's very important that you also participate in those forums when they are called upon. This year, the AGM will be held on the 11th of December. The venue and the agenda will be circulated to you in due time. So recently, the scheme has engaged in a number of activities, primarily member education activities across the country. And more recently, we sensitized teachers in partnership with the Teacher Service Commission through a program that was undertaken through the 47 counties. As recent as yesterday, we are also engaging members in the diaspora through virtual and in-person meetings. Our CEO, Dr. Jonah Yabei, yesterday handled a member education session at the Kenyan Embassy in Washington, D.C., reaching out to members in the diaspora serving the government through those missions. Again, a key announcement is that as a member, you have options established by the scheme and the fund administrator that you can use to monitor and track your contributions. That is by dialing *378# on your mobile phone. But also you can visit the member portal, which is available on our website, which is www.psss.go.ke. So those are just a few announcements, and I'm also sharing with you on the screen now the telephone and email contacts that you can use to reach out to the scheme. At this point, members, I would want to invite Emma Mugo from Gen Africa, who will take us through the first part, the first presentation. Then later we'll have Fadhili Masitsa from CPF Financial Services. Emma, if you're on the line.
Yes, I am, and thank you, Gumbo. Good afternoon, everyone. So I'll be taking you through our presentation on the investments. I think probably we could just take down yours so that I can share my screen. Okay, thank you. Just a second. Maybe you could confirm to me if you're able to see it on your end.
Yes, we can.
All right. So members, I'll be taking you through a presentation on how your funds are invested in the fund. And as Mr. Ngumbo mentioned, my name is Emma from Gen Africa. And in terms of what I'll cover, I'll just give you a background of who we are as Gen Africa. I think probably for the benefit of those members who may not have come across us so far. And also we look at the current investment structure of the fund and the mandate that we have been given by the Board of Trustees when it comes to the investment side. And also more specifically, what our role is as the fund manager of the scheme. And then we'll delve in a bit more detail on how the fund has grown over the period, the recent historical period. And then finally on the actual portfolio and where the funds are invested, as well as what the regulator, who is RBA, prescribes when it comes to investments done by pension funds, and also what to expect on the annual general meeting when it comes to matters investment. So in terms of who we are as Gen Africa, we are one of the oldest fund managers locally, founded in 1996. Currently, in terms of assets under management, I think the largest locally with around 740 billion in assets under management as of December 2024. And I think this has grown since then. A very competent staff of around 50 staff members, both on the investment side as well as the back office side of the company. And we manage over 100 pension clients. And of course, for us to then manage pension funds, we have to be licensed both by the Capital Markets Authority as a fund manager, managing assets on behalf of others, and also by the Retirement Benefits Authority, so that we can then be fund managers of pension funds. So I think members, that should give you some comfort in terms of the trustees appointing a reputable and experienced fund manager, and also because we are then licensed, it means that again any investment actions that we take have to be in line with the regulators whom we report to every quarter. So that's our key investment team, led by Patrick Karaoke, who's our managing director, our chief investment officer, Steve Biko, and we have Cecilia, who's the chief operating officer. And of course, the investment team is listed there with a key emphasis around, getting global investment certifications like CFA, which is the gold standard around investments around the globe. And you can see the bulk of our team has that certification, and also in terms of years of experience, quite experienced team there. So again, just to give you an overview of the expertise that we have internally in terms of investments. So I think when it comes to how the fund is then structured in a bit more detail, what we do or where our role comes in as the fund managers, we primarily deal with investment management. So the RBA has then set out a specific structure of how a pension fund should be structured. So for a fund to then operate as a pension fund locally, you then have to have an administrator who keeps the records of the underlying members, or an internal secretariat team that then keeps the records in terms of the member records. And then once the funds are deducted on your end from your payroll, the funds then do not come to us as the fund managers. Those go to a custodial bank. And the banks are then the ones that hold these assets. So our role as a fund manager is primarily to just instruct the custodian, who again is licensed both by the central bank as well as RBA. We then instruct the custodian in terms of the specific assets to buy and sell. And the custodian is then the one that goes ahead to buy and sell those assets and also hold the specific titles of those assets. So again, that eliminates a lot of the conflict of interest, because it means that as much as we are giving the investment instructions, the funds then do not sit with us under Gen Africa. They then sit with an external bank. So if anything was to happen to any of the service providers, the fund's operations more or less continue seamlessly, because even on the custodial side, the assets sit separately from the bank's assets. So even if there was anything to happen to the specific bank itself, not that there would be, but if there was, then assets in custody again are usually considered separate from bank's assets. So again, we all report to the Board of Trustees as service providers, and it is then their role to ensure that we are carrying out our prescribed roles in line with the various mandates that we have been given by the trustees. So in terms of the specific fund itself, so the PSSF fund then collects the contributions from the members yourself every month in terms of contributions. And the role is to then make sure that these contributions are then invested in a financially sound manner, so that they are able to generate returns for you members over the period of employment, so that again at the point of retirement, the fund is then able to pay your various pension benefits having generated returns from the funds that have been contributed over the years. And of course, the day-to-day running of the scheme is managed by your secretariat, who are then the ones that keep records in terms of the specific member details. And those are the ones that then guide the service providers in terms of the various payments that are due, as well as arranging for various functions like the webinar that we have today. Then the investment mandate, again, is then executed through the fund managers based on the structure that I've just showed you in the previous slide. And the fund manager is guided by the RBA guidelines, which I think we'll touch on briefly in terms of how investments of a pension fund should be made. And we are also guided by a document called an investment policy statement. So an investment policy statement is drafted by an independent external actuarial firm. So the firm will then look at the risk profile of the fund. And again, in consultation with the trustees, the investment policy statement will then prescribe the assets that we are allowed to invest in as a fund. And also the limits of those specific assets in terms of the percentage allocation as a percentage of the fund. So more specifically towards what our role is as the fund manager of the scheme, we primarily advise trustees on various investment options. And there are several in terms of the investment asset classes available in the market. So we have the traditional investment assets that are listed in the stock exchanges and are liquid, this being fixed income, which comprises the interest-bearing assets like treasury bills, treasury bonds, corporate bonds, and commercial papers, which these are bonds and bills issued by companies, and of course, your typical bank deposits. Then we have equities, which are more or less shares of companies listed in our local and regional markets. Those are classified under domestic equities. Offshore investments would then be any investments that are not listed in the regional markets locally. And finally, we have alternative investments that then encompass all the other investments that are not listed above. So these are then investments that are not listed on any stock exchange. The likes of private equity, which is shareholding in private companies. We have property, infrastructure investments, among many others. So we also advise trustees on that as well. And I think, as I mentioned earlier, we make sure that the investments are invested in line with the investment policy statement. So as much as, yes, we are the fund managers of the scheme, we don't have discretion to then go ahead and buy whatever assets we may feel fit. Those have to be in line with the investment policy statement that is given to us by the trustees. And then, of course, the investments are based on research. So we want to make sure that whatever securities we are buying are viable in the long term, because again, the fund remains a long-term entity. We want to the idea is to then make sure that whatever securities we are holding are able to still generate return consistently for members in the long run, and also be able to then generate enough income to pay members at the point of retirement. Then we meet your trustees every quarter, and during those meetings, we are able to discuss our strategy with the trustees. We also report to them in terms of how we have performed for that quarter, as well as our outlook going forward. And given that we are regulated by the RBA, we then also make the necessary returns to the RBA. And we also meet members during various member education forums, such as this webinar, and even the AGM that was mentioned, to also address any queries around investment matters. So in terms of how the fund has grown over the years, so as of June 2025, we were currently at around 234 billion, which is from around 43 billion as of December 2022. So again, you can see the considerable consistent growth demonstrated by the fund over the past years. And this is just a testament towards, the good work that the trustees are doing to ensure that the service providers are performing their roles well, and also that on the investment side, we are then also generating enough return to continue growing the fund consistently over time. So again, both the investment return as well as the contributions towards the fund have seen the fund grow, quite well over the past couple of years. In terms of where we were invested as at June. So typically we ensure that the fund again is well diversified so that we do not have everything allocated to one specific asset class or also towards one particular security. But again, we also ensure that we don't take on aggressive risk towards the fund. So you can see the majority of the fund is invested in stable interest generating assets. So this being treasury bonds issued by the government and also euro bonds, so that we are also generating dollar denominated return. And then we also have around 7% in equities and private equity being around 10%, and also offshore investments around 3% of the fund. So that again, also the fund is diversified, not just asset class wise, but also in terms of geographical allocation. The fund has allocation not just in Kenya, but also in investments across the globe. So that again, during years where investments may not perform very well locally, then we also have some allocation externally to also diversify off that local risk. So that's the allocation again, percentage-wise. And again, as I mentioned, the bulk of our investments being in treasury bonds, and then the rest is listed there in the previous slide. So I think just to touch on what the RBA prescribes when it comes to investments by the fund, because it's good to also know in specific terms what exactly is the fund then permitted to invest in. And this usually is it's prescribed under the RBA Act, and schemes are supposed to then comply with these regulations to ensure that, again, at the end of the day, the contributions coming into the scheme from new members are protected in terms of the investments that are being made, so that then we have consistent growth and stable long-term returns for the fund. So some of the permitted investments by the fund, for starters, is fixed deposits. And these fixed deposits have to be with the licensed banks that are licensed by the Central Bank of Kenya, and also those non-banking institutions that are licensed. But I think in addition to this, as Gen Africa, we then take an additional conservative approach, whereby the deposits we place, we only place deposits with the Tier 1 banks, so the bigger banks in terms of balance sheet locally. And again, this is just to ensure that we also put in place more protective measures, because we have seen banks collapse historically in Kenya, and depositors lose some of their funds. So I think we ensure that we do a thorough due diligence on the banks that we look at placing deposits in, and we would rather take a slightly lower return, but ensure that whatever banks we place cash with, they have a sufficient balance sheet to then be able to pay us at the point of maturity without any delays. Another permitted investment is corporate bonds. And corporate bonds are more or less bonds issued by a private company. So the company will come to the market and borrow money, and then investors will give money to the company, and the company then pays interest over the life of the bond. And at the point of maturity, when the bond matures, then the bond is paid back in terms of the principal. So again, this is also allowable under the RBA regulations. And one of the things, again, it prescribes is that the bond should be listed on the Nairobi Securities Exchange. Another one is collective investment schemes. So these are mutual funds that, again, are regulated by the Capital Markets Authority locally, and they are given leeway to then pull funds from investors, both corporate and retail, and then the fund manager makes investments on behalf of the underlying investors, and then every day distributes returns to the underlying investors. So again, that is another of the permitted investments under the RBA. The other one being offshore investments. So offshore investments usually will be any investments made outside of the East African region. So then that would be classified under offshore investments by the RBA. And again, that is another of the allowable asset classes on that end. And typically, offshore investments are usually important in diversifying the fund because you find most of them are then denominated in a different currency. For us, particularly, the offshore investments we look at are dollar denominated. So again, you make returns on two fronts. You have the returns from the underlying assets. So as the equities perform well or the bonds, you make that return, but also over time, as the Kenya shilling depreciates against the dollar, which has been the case historically, then you also make that return in terms of the currency gains from offshore investments. Then we have property investments. Again, those are also allowable by the RBA, whereby a pension fund can then be able to make returns from collecting rent from these properties or disposing them later at a gain. We also have equity investments. So again, these are shares listed in the local and regional exchanges. Those also are allowable under the RBA Act. So looking at the prescribed percentage allocations that the RBA guides when it comes to investments of pension funds. We then have cash. Usually they will say you cannot put more than 5% of your fund in cash. And again, this is usually because cash earns generally a lower return than other investments. So just so that the fund is then not holding too much money, earning a low return, you can only put a maximum of 5% of your fund in cash. Then we have fixed deposits. The limit for fixed deposits usually is 30%. Corporate bonds up to 20% of the fund. Commercial papers. So commercial papers are similar to corporate bonds, but usually these are issued by the company. But instead of being long-term, whereby bonds could be anywhere from 1 year all the way to, I think for local corporate bonds, the longest that's been around 7 years. Commercial papers usually would be much shorter. So the company can borrow for, say, 3 months, 6 months, or 1 year. So when it's below, it's 1 year and below, that usually is classified under commercial papers. Again, a limit of 10% on that. And then we have for bonds issued by the government, we have a limit of 90% or 100% for schemes receiving statutory contributions. And again, why they give a bigger allowance towards bonds is because typically bonds are considered the least risky in terms of risk. Because the assumption is that the government will keep paying you your interest over the life of the bond, and when it matures, then you get your principal back, as opposed to the rest of the asset classes, where you're not really guaranteed in terms of dividend or rent or yield or price gains. I think with bonds, the returns tend to be a bit more stable. Then when it comes to equities, the RBA allows up to 70%. Unlisted equities up to 5%, offshore investments up to 15%, property up to 30% of the fund. And then we have guaranteed funds by insurance companies up to 100%. We have derivatives. These have not quite picked up locally in Kenya. I think they're just being recently introduced. But again, the RBA allows up to 5%. We have REIT investments. REITs typically are pooled properties into a fund, and then as the income is received from those properties, it's then distributed to the underlying investors, again up to 30%. Then private equity and venture capital, this is shareholding in private companies that are not listed on the Nairobi Securities Exchange, up to 10% is allowed. Infrastructure investments up to 10%. And then any other asset that has been approved by the RBA up to 10% of the fund. So in terms of the declaration of income at the AGM, again, that usually is based off the financial statements of the fund. And I think during the annual AGM, the audited financial statements of the fund are then presented. Members then have a chance to go through these financial statements to see how the fund has been performing. And trustees, the board of trustees, again, is responsible for ensuring that these audited results get to members, detailing the income that then has been generated from all the investments that the fund has made, then less any expenses the fund made, and then whatever is net is then distributable to members each year. So usually our report, again, like I mentioned, at the AGM, we make a report also on the investments that we were, or rather on the economic environment of the year, the investment income that the fund was able to make from the various securities. We'll also give an outlook of the markets going forward in terms of what we expect going forward. And also the performance of the scheme is also discussed at the AGM, and also the investment strategies that are planned to be deployed going forward. So I think members, that's the end of my presentation. I'll hand it back to you, MC, for any, and I think we'll take questions at the end, if I'm not wrong. Thank you very much.
Thank you, Emma, for that presentation and walking us through that cycle of investment. Yes, indeed, we'll take questions at the end. So at this point, members, we proceed to the second presentation by the fund administrator, but I note that we have received a number of questions on the chat and via the Q&A. So if you have any questions to Emma, you can put them up on the chat. She'll respond to the questions after the second presentation. So at this point, I want us to hand over to Fadhili Milimu from the fund administrator to walk us through the second part of the engagement. Fadhili?
Thanks, Gumbo. Can you hear me?
Yes, we can proceed.
You can allow me to share the presentation, if you don't mind.
Okay. Okay.
Good afternoon, members. I'll be taking you through how to be able to track and see your income. And I just have one presentation to show you. And this presentation will just be a typical statement that shows how one can be able to check on the contribution and see how the income has been allocated to you as a particular member in this particular fund. Emma has mentioned from Gen Africa that indeed they do declare income for the fund, and that particular income comes to us or the administrator to be able to actually distribute this particular income pro rata to each and every member within the scheme. Once again, my name is Fadhili Milimu. I'm also joined in by my colleague, Solomon Kogo, who will be able to attend to any questions that might be there at any particular point. We are the administrators for the Public Service Superannuation Fund, known as CPF, that is County Pension Fund Financial Services. We administer the scheme in terms of maintaining data and records for your scheme, and also issuing statements and processing benefits. Gumbo, I can still not be able to share. I don't know. Gumbo, are you there?
Yes, yes, I am, Fadhili. Just a
still
moment.
facing.
Can you try it now?
Let me try. Yeah, it's now okay.
Okay.
Can it be seen?
Yes, yes, we can see it.
How about now?
We can.
Okay. So this is a typical statement that each and every member should be able to access through the portal, and also be able to access through the USSD in terms of actually requesting for a download or an email request to get this particular statement. So ideally, a typical annual benefit statement has three components. This is the opening balance from the previous financial year. In this case, I've just shared a sample statement as at June 30th, 2024, for you as a member to appreciate how you can easily be able to peruse and check the numbers and see if they're okay at any particular point. And actually, just to confirm, all these statements have been provided in the portal. So it's you as a member to be able to take time and peruse through and try to access this particular information. And with this particular information here as a statement, you'll be able to now easily understand. So you have three components. Of course, the first part of it talks about the detail of the members, the member number, the payroll number, which is your personal number, national ID, KRA PIN, and all this information. We are requesting each and every member to be able to fill these particular forms as provided in the website or through your employer so that you can be able to update our information at any particular point. So the first component of the statement that you're looking at is the opening balance, which talks about the balances of the previous particular financial year. In this case, this particular statement is for the period ended 30th June 2024. So if you're looking at the opening balance will be for 1st July 2023. Then you'll have the contributions for that particular financial year, which runs from July 2023 all through until the close of the financial year ending as at 30th June 2024. So if you take note, you will see a clear demarcation of employee deduction and also a clear demarcation of the employee contribution, which now in this case, if you look at employee, it is 7.5% of the basic salary, of your basic salary, and the employer is doing 15% of your basic salary, putting a total. I've just done a sample for you to appreciate. This particular statement is showing 2,000 as an employee, and the employer is doing double in that particular component, putting a total of 113,000. So that will capture the contribution for the financial year. Then now, the bigger question that many members are asking, where can I trace this particular income? This income can be traced on the third component there, which has been highlighted in yellow. You will see a net return, and it's important to mention that the scheme has done 3 financial years. The first financial year was the period ended 30th June 2022, which now the fund manager had declared a return of 10%. Coming to the second year, which is now 30th June 2023, the fund manager declared 5.4%, and now the current financial year, which was the last financial year, which is 30th June 2024, the fund manager, which is Gen Africa, declared 11.9%. All these form part of your balances, and if you look at the previous financial year of 2023 and 2022, they form part of the opening balance as at July 2023 in that particular context as you look at this particular statement. So the component down there of the figure roughly of say 31,000 represents the income that you as a member you'll have earned. So whenever you are checking this particular annual benefit statement, it's important to recognize that yes, this particular income that is being declared by the fund manager holistically, you have a portion of it which is prorated and distributed to you on a compounding effect to you as a member, so that you can have that income component vesting on you at any particular point. Then lastly there, you will see now the total combination of the closing balance, which combines the opening balance together with the contribution received for that particular financial year, and again also the income that you've earned for that particular financial year, giving you that particular figure of the closing balance. So you're trying to encourage each and every member, take some time, go through your statement year by year. We've already shared these particular statements on the portal. You can download them and you'll be able to actually see how much you've been able to contribute and how much income you've earned over time. Whenever you see any gap, please do not hesitate to raise those particular concerns through the Secretariat, and it will come to us as the administrator, and we'll be able to attend to that particular issue at hand. So this is just how simply you look at how your income was allocated, and this is envisioned in your member benefit annual statement. Gumbo, that is all I had. Unless there's anything else pending, I believe you can handle it on the Q&A session. Thank you so much.
Thank you, Fadhili. In your last statement, you talked about members who may have gaps in their statements. And I noticed quite a number of members in the chat have raised that concern. maybe you would advise on how these concerns can be addressed and within what timelines. For instance, there is Anonymous who says that I'm a TSC employee, but on my statement, some months are missing. What can I do? There's someone Festus who is asking, I'm new here. How do I register to check whether my employer remits the contributions? Maybe just handle that question by Festus. How do they check whether the employer remits their contributions? How do they access their statements? Fadhili.
Thank you, Gumbo. I think to address the issue of the gaps, yes, we do acknowledge there are certain sponsors who have gaps, but I think it's important to mention that contributions are coming on time. The government is also remitting the employer contribution on time. What is actually lagging in between is the reconciliation process to ensure that we are able to reconcile the schedule received and the amount paid so that we can actually book the correct deductions for each and every member. Remember, the scheme has a membership of around 505,000 roughly there. So the exercise takes a bit of some time, and it's a work in progress to ensure that any particular month that we receive a schedule, it is most updated. So we take note of that, but again, we want to confirm that we are actually fully updating the members' records. And actually for TSC, I can confirm before end of this month, all the contributions up to July will have been updated in that instant. For those members who are yet to register and be able to access this particular form of statement, we have provided two options. As Gumbo has mentioned, all these is within the website, www.pssf.go.ke. But again, also just to mention critically on how you can go about it. If you want to access through the USSD, you can press *378#. You will have to register because you're a first-time user, and having registered, you'll put in your details, feed in your information, create a password, then again also press the *378#. Then now you'll be able to go to an option written statements. There you can easily be able to get an emailed statement or actually just view the balances. But the better one or the better option that we have is the portal link, where you can easily go to the Chrome or Google in your phone or in the laptop or in your desktop that you have. As long as you have internet, you will just type members.psss.or.ke. If you're not able to capture that, you can also easily go to the website, which is www.psss.go.ke, and you'll also find a link that can direct you or redirect you to the portal link in terms of accessing your member statement. So you can easily get your contribution statement that just shows you the contribution for the period the scheme commenced until to date. And you can also get this particular annual statement that I've shared here that comprehensively shows you the opening balance, the contribution for the financial year, the income that has been earned as declared by the fund manager, and also now showing you the closing balance. These are year-by-year statement. The contribution statement just captures your contribution for the full period you've been employed since 2021, 1st January, in terms of deduction at that particular point. I hope Gumbo have answered that.
Yes, Fadhili, thank you. You have very well addressed that. I wanted you to specifically address that concern because I've noticed it's recurring on the chat, and you have very well addressed it. Olive Casolo, I see that your hand is raised. Please unmute your mic and share your comment or question. Olive. Olive, proceed. So as we're waiting on Olive, any other member that has a comment or question to share, you can raise your hand so that the host allows you to speak. Hassan Mohammed, please unmute your mic and proceed.
Yes, hello.
Yes, Hassan.
Yes, good afternoon. I'm Hassan, TSC employee. Yes, I've registered with this PSSF portal through the membership portal. And I try to download the contribution statement, of which I got it from January 2021 up to 2025 June. And I have seen some gaps in that statement, of which my statement had no record for February 2023 at all, the employer and the employee contribution, and also for April and June. There's no remittance from the employer. I try to raise that issue through the PSSF contact email address, and I've not received any even acknowledgement of that issues.
Okay, thank you, Hassan. We take note of your question. Fadhili, you will address that concern by Hassan, who has their contribution statement. They are noting some gaps. I think it's in relation to what you had addressed earlier, but you can just address it now specifically in the case of Hassan and what should he do. Madheri, Naomi, please unmute your mic.
Hello?
Madheri? Yes, hello?
Can you hear me? Yeah. I asked a question. It's still with what our colleague has asked. I'm from the National Treasury. I also noted gaps in 2023 for 3 months. In all the statements, I am not able to see any interest, and so I don't know whether it's still an issue of reconciliation, and when are we going to see the complete statements? Thank you.
Thank you, Naomi. As Fadhili prepares to answer those questions, back to Emma, if you're still on the line. There's a question that was raised on the chat by Jared Arasa. So Jared is asking that if for example, I contribute 1 million shillings, how much do I expect, or will it be a fixed amount? So maybe that question is on the interest rate. Is it a fixed interest rate, and what determines? Emma, if you could handle that kindly.
Yeah, thank you for that question. It's not a fixed return, so the return earned each year is based on the return that the underlying assets are then able to generate, which varies based on various market dynamics. So for fixed income instruments, interest rates usually will vary. They'll go up and down over time. So depending on the interest rate cycle, you'll find that when interest rates are high, if you invest in cash at that point, you're then able to get higher interest rates and higher coupons on the bonds. But as rates come down, then that also comes off. And I think that usually is driven by market dynamics. It's not anything in our control as investors. For those of you that probably follow bond interest rates, you'll find, for example, last year, the government was giving as high as 18% on treasury bonds. I think that has since come down to around 13%. So you'll find, depending on those market cycles, then interest rates earned will vary. The other one is for the other listed securities. So for example, equities, offshore securities, again, the prices of those securities will vary. So if we buy, for example, a Safaricom stock, the price goes up and down. So in years where it goes up, then of course you're able to earn that return plus the dividend. And again, we'll find those market cycles over time. So again, it's a consolidation of the specific returns earned by each of the securities. And that ideally then varies over time depending on the various market cycles. Thank you.
Thank you, Emma. There's a question by Maureen Kingethu. What is needed for transfer from one employer to another scheme if one changes jobs? Maureen, you need to access Form PSSS 4, which is a benefits claim form. So it is through that form that you request for the transfer of your benefits from this scheme to another registered scheme. There is some information that you need to provide in that form, including the name of that scheme and the administrator, and the bank account details of the receiving scheme. So that form is available on the PSSS website. Under the members tab, you'll see the various forms available. So one of those forms is a PSSS 4, which is relevant for your case, the benefits claim form. Fadhili, would you want to revisit the issue by Hassan and Naomi?
Yes, Gumbo, I wouldn't mind. And thank you for the questions. And just to confirm and actually address the issue at hand, I mentioned earlier that we do acknowledge there are gaps, and specifically those gaps are touching on reconciliation of the schedule versus the amount that was paid. And one thing I like to confirm to the members herein, the employer is remitting on time. Take note of that. And again, also your deductions are being done and you're receiving those particular schedules in terms of the deductions, both employee and employer. The only exercise that is actually holding a bit to have your statements fully updated is the reconciliation exercise. I know that should not be something we are discussing here, but it's good to acknowledge that we have to undergo a process to ensure that we actually posting each and every member's account with correct figures so that it doesn't have any historical or future issues that may arise. So we actually requesting the members to bear with us on those particular cases. I've heard of TSC, I've heard of National Treasury. You realize that the gaps are minimal. They are not extensively touching on larger periods, but on small periods, which are really affected in terms of us reconciling. And actually, I'll confirm we've made progress. Those gaps were huge, but they are now reducing. We have made tremendous progress. Actually, by end of this month, mid-September, we want to confirm that all these particular gaps will have been sealed so that members can always keep on checking. The beauty of this particular arrangement allows you to constantly keep on checking your statement to see if it's updated. So even if you come and check next month, you'll actually notice that those particular gaps are being sealed as we go along to ensure that each and every member gets their true share of the deductions and the contribution from the employer. So yes, we take cognizance of that and we actually request for some indulgence, patience from the members as we try to actually seal these particular gaps. I think Gumbo have been able to address that at any particular point.
Yes, you have. Now, we have about 5 minutes to the end of our scheduled period. But let's take the last round of questions. There was a question by Japheth Ongaya. What is the procedure of additional contributions of an unitary basis as an addition to the normal deductions from the payslip? Yes, Japheth, members contribute 7.5% of their basic salary, but you can make additional voluntary contributions. So to do so, you would need again to access the form PSSS 3, which is the additional voluntary contributions form, available on the website, psss.go.ke. So in that PSSS 3, you'll give your instructions on your contributions and the variations in contributions. How much more do you want to contribute? And the last point of processing of that form will be to be completed by the head of human resource in your ministry or in your agency. So again, download that form, fill in, and submit through your head of human resource. There's a question by Jonathan Mungare. Fadhili, you can take this. Mungare is asking, at the time of exiting the service, how much is one paid? I heard somewhere that you pay a third. Kindly clarify. Another question by Winfred Morage, which is the last one. Is the interest earned only for contributions for that specific year? Does compounding apply for the previous contributions? Fadhili, if you could answer those two as we conclude. Thank you.
Thank you, Gumbo. I'll attempt to answer the two questions asked by Mungare in terms of exit. If one retires from this particular scheme, you'll be eligible to access a third of your total benefits, and the 2/3 is commuted towards a monthly pension that you'll be given, having had a conversation with the Secretariat to give you the best option available in terms of getting a monthly pension, either through an annuity or through an income drawdown. This monthly pension, I'd like to give an assurance to the members that it is a payment that goes for the rest of your retirement phase. In the event something happens and you die in between, the remaining portion is given to your beneficiaries that you will have enlisted at that particular period. So it's important to appreciate that you will not get everything as cash lump sum. You will just get a third of that particular total benefit, and the remaining portion will be given to you as a monthly pension to ensure that there is continuity of the monthly income that you're getting from the pension kitty that you've saved over the period of years you have worked in that particular instant. In terms of interest, yes, that income is distributed based on the share of the contributions you have for that particular financial year, taking note also on the opening balance. Remember, I mentioned the opening balance is a carried balance of the previous financial year together with the income and the other previous financial year. So it will go cumulatively for as long as you're still in active employment until you exit. So this particular interest is vested on the opening balance for that particular financial year, the contribution received for that particular financial year, giving you an income, then actually now having the total balance as the closing balance for that particular financial year. So this income is distributed proportionately to each and every member on a compounding interest. Let's say, for example, Emma from Gen Africa, they have declared 23 million. As a member, you have a share of that 23 million as an income. And that income, it will be distributed to you pro rata based on the contributions that came in for that particular financial year and the opening balance. A simple case scenario, if you have an opening balance as at 1st July 2024, it will earn the interest for the 365 days until 30th June 2025. Now, on the contribution, depending on the month it's coming in, it will be compounded to earn the interest from that particular date when the contributions came in to the closure of the financial year ending 30th June 2025. So it's not just a simple interest, it is an interest that vests on you optimally based on the compounding interest formula that has been applied on the balances that you have for that financial year.
Thank you, thank you, Fadhili, and the members for, I think it's now past 2 p.m. We had scheduled to have this meeting between 1 and 2 p.m. So just an additional 5 minutes, maybe just to revisit the announcements that we had at the beginning, for the sake of the members who joined in quite late, but also to appreciate our two panelists this afternoon. That is Emma from Gen Africa and Fadhili from CPF Financial Services. By way of reminder, at the beginning of the meeting, we had some few announcements that members should take note of. The key of which is that the pension scheme or your pension scheme will be holding a Pan-African Pensions Conference from the 26th to 28th of November at the Diamonds Leisure Beach and Golf Resort in Diani. We urge you to register to attend that conference by visiting this website, that is pssf.africa. That's a dedicated website for this conference. Please visit that website and register. There is more information that you'll find on the website regarding the why of this conference and who is attending, and how can you participate as a member of the scheme. The other thing was on the member communication. There are a number of concerns that have not been addressed that were raised via the chat in the interest of time. But I would want you to take note of this phone number that you can reach us through, either by calling or by a WhatsApp. And I know my colleagues who handle these calls are on the line. That is Anne and Joyce. So again, I'm putting you on the spot, Anne and Joyce, because you'll be receiving calls from members who are on this call. The number is 0746 111 777. You can call that line, or you can also send your concern through the WhatsApp, the WhatsApp platform. You can also follow the PSSF WhatsApp channel. We use that channel to send regular member communication, as well as access our PSSF superannuation newsletter that is available on the site. And again, also, you can follow the PSSF on various social platforms. Fadhili had mentioned the channels that are available to members, including the USSD code *378#, and the portal that is available on our website, psss.go.ke. I'm just revisiting this for emphasis because it is very important for you as a member to know the member channels available to you and how can you use them in terms of accessing your statements and even updating your details. So we have come to the end of our August webinar. I want to thank you, members, for taking time to attend this engagement today. It's very important that we keep engaging throughout the year because there is so much that is there to discuss that we may not be able to handle during the annual general meeting. So these regular engagements provides us with a platform to also engage and listen to you, take individual concerns and address them on the go. We do this every month, so we'll be sending invites to you for the month of September, ideally the last Thursday of September. And we'll also announce in advance what topic we'll handle during that session. I also want to thank again our two panelists for taking time to be with us this afternoon. And thank you all for attending the webinar. We wish you a nice afternoon and wish you a fantastic week. Thank you so much. Asante.